Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 12th to Friday the 16th of the 4th 2021. So we've written up the weekly flows. We're going to start this to save time as we do the daily flows, but let's make a start then. So the weekly flows then, Monday the 12th to the Friday the 16th, Euro dollar plus 92, so over that period the Euro dollar gained 92 points or pips, Euro yen minus 9, Euro pound minus 17, pound dollar plus 128, pound yen plus 11, and the dollar yen minus 97. If we look at the actual flows then, which we've inputted, you've got a negative unopposed driver in the dollar at minus 317, so you've got no backdoor flows. So you've got the opposing positive flows going mainly into the pound at plus 156, next into the yen at plus 95, and the euro was a positive rock at plus 66. That's an activity of plus or minus 317. So over the week then we've had unopposed dollar weakness, and we've had pound and yen strength with a little bit of euro strength as well. Right, we're going to stop it there and write up the daily flows, so don't go away. Right, welcome back. We've written up the daily flows. We'll rattle through these to save time. So Monday the 12th then, we had a negative opposed driver in the dollar at minus 89, front and backdoor flows mainly going into the yen at plus 67, into the pound at plus 26, and the euro was a negative rock at minus 4, activity plus or minus 93. Tuesday then we had a negative driver in the dollar again, minus 83, front and backdoor flows mainly going into the euro at plus 63, into the yen at plus 61, and the pound was the negative rock at minus 41, activity plus or minus 124. Wednesday then we had a negative driver yet again, opposed driver in the dollar, minus 75, front and backdoor flows mainly going into the euro at plus 53, into the pound at plus 37, and the yen was the negative rock at minus 15, activity plus or minus 90. Thursday we had a positive opposed driver in the yen, plus 63, front and backdoor flows mainly coming out of the euro at minus 62, out of the dollar at minus 10, and the pound was the positive rock at plus 9, activity plus or minus 72. Friday then, last day of the week, we've got an opposed positive driver in the pound at plus 132, front and backdoor flows mainly coming out of the yen at minus 80, and out of the dollar at minus 62, and the euro was the positive rock at plus 10, activity plus or minus 142. We're going to stop it there, and then we're going to have a look at the individual asset classes over the week, so don't go away. Right, we're back then. Just to remind you over the week we had the dollar as the unopposed negative driver, so we had no backdoor flows. Basically the dollar was extremely weak, and the pound and the yen were soaked up the bulk of the opposing positive flows, with the euro ending up slightly positive at plus 66 over the week. So we had mainly dollar strength was the flavour of this last week, and with the pound and the yen being soaking up the positive flows. Right, so let's have a look what's happened in the asset classes. With the US dollar index, then, as we said, the dollar was driving negatively. The dollar index inevitably has come back. So it broke the high, it came back to the resistance. It's sort of had this like double top sort of effect, and it's now at the previous resistance. Gold then has come off the floor a little bit off the back of this weaker dollar. It's at 0.37 from the floor in our model terms. Oil is 0.3 from the high, so oil is reasonably strong, but hasn't made it back to the pre-OPEC meeting level. Right, Wall Street then broke the high and is steaming on the up. S&P double top, which has been broken, and the tech finally broke this resistance. It's catching up. But remember that the tech, this is slightly deceptive because the tech was really pumped. I think it was November 2020 last year, so it's probably relatively in the same position. US 10-year then, this is the price. So we've had a pop in the price, which means the yields have come off 0.4 from the floor, and the bund, which is the equivalent European end of it, 0.33 from the floor. So you can see that relatively speaking, European yields are slightly marginally stronger than the US yields at the moment, and is a reversion of what was happening before. So it's looking good for the euro dollar, basically, in that sense. Right, copper then had these 5 pumps. It went back to the second pump. It went back to base camp. It is now operating at 2.2 pumps. Copper never really fully got going yet, but we think it will very shortly. And US steel sold off at the double top, broke the resistance, it's come back, and it's slightly soft at 0.4 from the high. Right, so we'll just stop it there and we'll do the final analysis. Right, we're back then. So what's been happening with our trades? Remember, we're short the USD against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Right, basically trading was difficult all week and to extent last week. What have we got? We're scaled. We scaled right up. We then had to retrench. We retrenched to about the 60% point. We dirged around. We went negative. Then we started to pump in again yesterday, which was and we're up to about 80% scaling again now. So we went from 100% down to 60% as we were getting our trades were deteriorating, and we're now back up to about 80% on the scaling. So what have we got? We're now we're now minus approximately 230 points overall. The peak was plus 2,900. The low was minus 1,500, and so the swing is approximately plus or minus 4,400 points. So it's been quite swingy. The market has basically taken a long time to get the message. It's got the message on pretty much everything apart from the New Zealand dollar, and it's starting to get the message on the New Zealand dollar now. We called the USD softness correctly. The thing that's been holding the trade, the overall position up, is this New Zealand dollar strength, which and we're going to be doing the data cycle model shortly this morning, so try and catch that. It'll fill in the gaps. It'll show you what's going on in all the major complexes with regards to the data cycle, and some further analysis. So that's where we are. We're sort of, given our size, we're not far off break even really. 230 points is basically break even for us. We're looking at seeing how things develop next week. If the macroeconomic picture carries on starting to roll into our favour, so as I say, everything basically was happening apart from this New Zealand dollar, and we were sort of scaled into the shorting the New Zealand dollar, and therefore we were facing the wrong way for a lot of the time. That's rebounded, and we'll see where we go next week. So I hope that was useful. Try and catch the data cycle review later today, which is our economic calendar basically modelled. If not, see you Monday for the daily review. Thank you very much. Goodbye.